Presentation 2023 Employees Provident Fund. Employees Provident Fund (EPF), Employees Provident Fund, is a retirement benefit scheme provided by the Employees Provident Fund Organization, EPFO. The employee and the employer contribute to the EPF India scheme on a monthly basis in equal proportions of 12% of the basic salary and dearness allowance. Who is eligible for EPF? Eligibility for EPF for employees. The company must be registered with the EPFO. An organization with less than 20 employees is not required to register for EPF. However, they can do so voluntarily. You receive a monthly salary of 15,000 rupees, inclusive of the basic wages and dearness allowance. What are the benefits of EPF? There are plenty of benefits for investing in this Employees Provident Fund. They are as listed below. Capital appreciation. There is a fixed rate of interest available in this EPF India scheme. Moreover, the EPF also earns an interest even when lying dormant. Corpus for emergencies. Because of specific premature withdrawal rules, the EPF can act as an emergency corpus. Corpus for retirement. The main reason people invest in the EPF is to get a retirement corpus. The corpus gives investors a sense of security. Tax saving scheme. Employees Provident Fund comes under Section 80C of the Income Tax Act. Therefore, even the earnings from this EPF scheme are exempt from taxes. Therefore, there are many benefits of making an EPF contribution. How is interest calculated on EPF? Here's how to calculate EPF interest. Contributions to this Employees Provident Fund are made monthly. However, the interest is calculated at the end of a year. An interest rate of 8.50% is divided monthly, and that amount is paid to the employee. Therefore, monthly interest is 8.50% divided by 12 equals 0.7083%. For a running balance of 6,000 rupees, the interest calculated per month is shown below. EPF interest equals running balance for the month 0.7083 above was the EPF calculation for the years 2020-21. How to calculate Employees Provident Fund? EPF contribution. Employees' contribution. No matter the employee's income, the contribution to PF is 12% of the basic pay plus DA. Employee contribution to EPF equals 12/100 basic plus DA. Employer's contribution. The employer's contribution to PF is as follows. Employer's contribution to EPF equals 3.67/100 basic plus DA. 8.33% goes to the employee pension scheme. What are the categories of employers' contribution to EPF? Category percentage of contribution, %. Employees Provident Fund 3.67 Employees Deposit Link Insurance Scheme, EDLIS, 0.50 Employees Pension Scheme, APES, 8.33 EDLIS Admin Charges 0.01 APF Admin Charge. Employees Provident Fund Contribution Example. Suppose an employee earns 15,000 rupees per month. Then an employee's contribution is 1,800 rupees a month according to the calculation shown below. Employee contribution to EPF equals 12 divided by 100 times 15,000 rupees equals 1,800 rupees and employer's contribution is 550 rupees a month, as shown below. Employer's contribution to EPF equals 3.67 divided by 100 times 15,000 rupees equals 550 rupees and 5 paise. What are EPF tax rules? EPF is a tax rule. Therefore, it is exempt from tax on EPF withdrawal. Further, contributions and interest received are also exempt from tax. However, there are some cases where EPF is taxable. These are: it is taxable if an employer's contribution to the Employees Provident Fund exceeds 7.5 lakh rupees in a financial year. An employee is liable to pay tax on an amount that exceeds 7.5 lakh rupees. If an excess contribution from the employee's side to the EPF account exceeds 2.5 lakh rupees in a financial year, then the interest earned on this extra amount is taxable. If there is no employer contribution to an EPF account, which is the case for government employees, then the interest will be tax exempt up to 5 lakh rupees in a financial year. Interest earned on inactive EPF accounts is taxable in the employee's hands. Withdrawal from the Employee Provident Fund account is tax exempt except when withdrawal happens after less than 5 continuous years of service. And if any withdrawal amount exceeds 50,000 rupees, then TDS is applicable at the rate of 10%. However, withdrawals can be exempt in an employee's poor health, closing of a business or other events beyond the person's control. What is EPF Challan? EPF Challan. What is EPF payment online, working, benefits? Particulars in the EPF Challan. It's a type of savings account in which both the employer and the employee contribute the same amount regularly. Contributions can only be made by registered employers and employees of registered employers. What is the monthly payment of PF? Provident Fund payment due date. Provident Fund, PF, payments are due on the 15th of each month. The employer must deposit a total of 12% or 10% of the employee wages towards PF on or before this date every month. For most entities, the PF rate of 12% would be applicable. Is it compulsory for employer to pay EPF? If you are an employer with an organization that employs 20 people or more, it is mandatory for you to register under the EPF scheme. If your organization employs less than 20 people, you can still opt to register under the scheme. What is EPF payment? EPF payment, online procedure, receipt download and late. EPF is an ideal retirement fund in which both the employer and the employee contribute an amount equal to 12% each of the employee's salary, basic and dearness allowance, to the EPF, at fixed equal intervals. However, only the employers that are registered and their employees can contribute to this fund. The 28th of March 2023. Who has to pay EPF? In this employees' provident fund, both employee and employer contribute to this fund. The contribution is to the tune of 12% of basic salary, with dearness allowance taken into account if paid. However, not all of an employer's contribution goes to EPF. An employer contributes around 3.67% of the 12% to this fund. Challan 280. Challan 280 is a form that can be used by an individual to make an income tax payment of self-assessment tax, tax on distributed income and profit, regular assessment tax, advance tax, and surtax. The form is also referred to as ITNS 280. Benefits of Employees Provident Fund. Thank you for your attention.